Well, it took me exactly 5 years to become this profitable. But lucky for you, in this video, I'm going to show you all the necessary information for you to also become very profitable in less than 30 days. You see, it's all a game of mind actually, and there are 4 key elements you need to take more serious in this game for you to achieve profitability in less than 30 days, which are, well, account leverage, the chart patterns, market manipulation, and the time frames. Well, the first thing you probably don't realize is that the market is trying to confuse you. It's trying to constantly confuse you. Starting with the market manipulation, well, you thought I was gonna start with account leverage on number 1, didn't you? Well, that's number 1 for you. So what is market manipulation? Well, it is the attempt to artificially increase or decrease the price of a security, and it is artificial because the manipulator is attempting to skew supply and demand to push the price in a favorable direction for them. So you see, and there are many types of manipulations, but today let's talk about false breakouts. All right, so false breakouts in the financial markets are referred to as the breaking of support or resistance levels and returning to the previous trading range. In most cases, the traders, they get fooled by this and by this move, and may end up with many losses. So to understand perfectly, you need to know these 3 things. The first reason is the reason for the fake price breakout, and number 2 is how to recognize the fake price breakout, and then on number 3, the trading strategy with fake breakout, how to achieve profitability with false breakouts. So why do false breakouts happen? Well, false breakouts can occur for various reasons. 2 of the most common reasons are the market manipulations, which I've said earlier on, and the market fluctuations. All right, so stay tuned for the explanation of these reasons. All right, so if you have watched the other video I posted, you would know that I blew Joey's account in comparison to a $10 account to see which was easier to trade, and everyone said the $10 account was probably easier, as there was much more concentration in the small account than in the bigger one. So I shall be trading Joey's account. If you want yours traded as well, just visit my Telegram channel for the giveaway announcement and for the settings of the Bollinger Bands, which I shall post there as well. So use the link in the description and go in my Telegram group, and then you see. So back to our previous discussion, let me explain the 2 main reasons for false breakout. Starting with the market manipulation. Well, when market manipulation happens, traders or large institutions may use false breakouts to manipulate the market and generate false signals. They may push a currency pair's price above or below a key level so that the price hits the stop loss orders and traps you, the traders, on the wrong side of the market. So in the market, when you identify your perfect bullish and you already know it's gonna go up, then you enter too early, the price goes to the opposite direction downwards to break the trend and keeps going down until you are stopped out, and then it comes back up with a huge wick and then back into the trend line where you have been stopped out. So that is what happens most of the time when you're stopped out of the market, when you enter your perfect trade. Then on the market fluctuation, well, the forex market can be volatile, especially during the news events, the major economic announcements. High volatility leads to a sudden unexpected movements, even in the minor currency pair, which can result in false breakouts. I'm sure before, when the news is about to drop, you have seen the price going up and down very fast and mostly breaks a trend line and then becomes back into the trend line with a huge wick. So how does one recognize a false price breakout in the forex market? Well, this method includes using a multi-time frame analysis, understanding market trends, identifying the price patterns, and using technical indicators. That's when the BB strategy comes into contact. And then also you need to observe your trading volumes, and then also pay attention to the news event. I'll cover this in the next video. For now, let's talk about leverage. All right, let's put it simply like this. Leverage effectively amplifies the amount of money you are putting down to trade with. For example, if you decide to use leverage when trading stocks or shares. You can buy an increased amount of shares or stocks. So with a leverage of 1:10, it means your money will be amplified 10 times. So if it is 1:30, then your exposure is amplified 30 times, and so on. However, the flip side of trading with the leverage is that if the trade goes against you, your loss will be amplified as well. So in other words, greater exposure leads to bigger ups and bigger downs, and you can potentially lose more than you invest. So do be careful. And but in my opinion, I recommend you to use a small leverage until you are profitable enough to use a bigger one, as small leverages gives you a higher chance of keeping your account for a much longer periods. Okay, so now let's move on to chart patterns, my favorite by the way, and then I'll show you the best chart patterns to look for so that you won't waste your time. So in definition, a chart pattern is a shape within a price chart that helps you to suggest what prices might do next, based on what they have done in the past, of course. And the chart patterns are the basis of technical analysis, and then they require a trader to know exactly what they are looking at as well as what they are looking for. Well, these are the best chart patterns I use all the time. So we have the head and shoulders, the double top, the double bottom, the wedges, the pennants or flags, and the triangle patterns. So I'll also do a detailed video to focus on this more, to help your win ratio increase up to a significant amount. All right, so next and lastly is the time frame. So choosing a shorter time frame is necessary if a trader has shorter trading horizons. However, shorter time frames usually result in a lot of noise, which can result in an error of judgment. You know how these shorter time frames can carry a lot of snakes. We have talked about this, especially the 1 hour time frame, not to trust it. Therefore, it is always advisable to identify an underlying primary trend with the help of longer time frames. All right, so this concept is what you need to grasp in order for you to boost your trading in less than 30 days. You need to take into account more seriously these things. So I'll also show you the video of me explaining in the real market by also trading Joyous account. All right, so do pay attention and do subscribe to the channel. Let's go.